Hey traders, Todd here of tradinganalysis.com. This is going to be the video update for Wednesday, May 20th. And I want to look at the S&P 500 on monthly. There's some really key timing dates coming up here. I want to bring your attention to it. I'm not saying the market's going to crash. I do think some serious decisions need to be made really just before we get into this summer, and I'm going to show you why. So we're looking at the S&P monthly. This is a linear scale. I'm not going to the log scale. I'm going to, just for the interest of time in this video, but to do such longer term analysis like this, you really should go to semi-log, and that's going to impact some of the projections, but we'll just do linear for now because we're focusing on time, and that doesn't matter. Okay, so the first thing we want to look at is the 2000 peak in the NASDAQ, February 2000 at 1552, and obviously we're looking at the S&P. Okay, if you go out from the high in 2000 to the high 2007 post-credit crisis, that was 2,700 trading days or 90 bars. Okay, if you go out from the 2007 high, add 90 bars, 90 months, another 2,700 days, that comes to, I believe, I'll have to look at the chart, I think it's June is another 2,700 trading days. So from high to high to high, we have perfect symmetry, and it's right here at this 100% level. So that's key. Another interesting thing we have coming in here to the summer is we go post NASDAQ bubble low at 768. Compare that to the credit crisis low, which I remember I traded was 666 low. Okay, that was 76 monthly bars, which comes out to 2,280 days. Okay, project that forward, and that puts you out into July. Okay, so the date specifically we're looking at here in the key timing is May. The month of May is very key because that's equal distance between the two prior highs in the market. And then not quite as important, but important is the October 2002 low compared to the February 2009 low. 100% of that puts us into July 2015. So the next couple of months, we have some really, really key timing points in the markets. From a price point of view, also important is if you look at the 2007 to 2009 decline, do a 1.618 fib extension, that's 2138. We're at 2127 in the S&P. Really important. Now, I do have the Elliott Wave labels in here as well, and this one goes off the high from 2000. It really doesn't make a difference. It's like a difference of 30 S&P points. This 1.618 of 5 versus 4 is at 2100. So it's not really, it doesn't matter if you go from this high to this high. It's within 30 S&P points. That's a day's range. That's not a big deal. Okay, so you know, we definitely have key 1.618 price. We have key equality between two prior peaks as well as equality of the two prior troughs, pointing to a very key decision point in the market over the next 2 months, in the next pretty much right here. Okay. Besides that, we do have fib resistance around 2100 to 2138. We also have a next fib resistance zone 2438 to 2485. So if we want to make a kind of summer run here, we do have a little bit more room to go. I mean, that's enough. That's, you know, another 10-15% on the upside up into that resistance zone. Those of you who are following the Elliott Wave count, here's what I'm looking at. I'm looking at a 1-2 and then small degree 1-2. I'm looking for the top in this blue 3. That's going to set up a pullback in blue 4. It's not going to be significant. It's just going to be equivalent to this this European crisis pullback, which was, I think it was a 20% setback from like 1400 SPX to 1060, 1050 area. So it was almost 20% decline. So there was pretty much a 20% decline. So, you know, we should have something similar in wave 4 before the market gathers itself and moves up. So I'm wondering if that decline that we're coming up on is going to match up with some of these key dates heading into the summer. I'm not short. I'm continuing to be long, but I'm very much on guard for this. All right, guys, that's going to be it. I just want to draw your attention to those longer term levels. Hope that helps. I'm going to roll into the premium video now. We have some trade setups to talk with customers about. So we'll leave it there and see you in the next video update.